Joining me right now is Navellier Associates Chairman and Founder Louis Navellier. Also joining the conversation this morning, all morning long, is pollster and the president of Maslansky & Partners. Lee Carter is here. Also Optimal Capital Director of Strategy, Francis Newton-Stacy. Great to see everybody this morning. Thanks so much for being here. Louis, great to have you. I want to get your take on where we are. Do you believe we are right now in peak growth? A lot of people are worried that this is the best it's going to get for some time, and growth numbers will start to come down later this year and into 2022. And that's one of the reasons for the market's volatility. What do you say?
Well, yeah, this is peak sales and earnings momentum. The year-over-year comparisons are very easy. They'll be very good in the third quarter as well, but they'll be slowing down. But I think as far as the market's volatility is concerned, that Monday correction was all value. I'm a growth manager, and believe it or not, our large cap growth stocks were up slightly on Monday. So it was a deep value correction. It was airlines, cruise ships, hotels, and a lot of energy stocks because, OPEC's increasing production, so that weighed on the market. But as long as you have stocks with good sales and earnings, we're in earnings season now. The next 3 weeks are going to have wave after wave of good news, and then the companies that guide higher and can sustain strong sales and earnings momentum are going to be great.
So you say it was a sell-off of value because I guess value had been trading up a bit. Do you want to buy growth now going forward, or are there now more opportunities in value after that sell-off?
Well, I'm a growth manager, so I don't normally buy value stocks. I will say that I do own aluminum, steel, copper, and lumber stocks. And the value stocks are going to have very strong earnings. I noticed were very, very strong on Tuesday, and they look okay this morning. So I only want to have stocks, whether they're growth or value, they're going to have very strong sales and earnings. And, we have this production bottleneck in the world, and with all the supply chain issues. So there's a lot of pent-up demand and a lot of order backlog. So the third quarter is going to be fine. We got at least 6% GDP growth in the third quarter. So we're going to be okay.
So Louis, you say that the current environment is similar to the 1990s. What do you mean by that?
Well, there's just a lot of excitement about growth, and also we have these very, very low interest rates fueling everything. Obviously, what the 10-year Treasury bond yield has done this week is probably the most bullish thing. And, I'm in the camp with that we're doing this thing called modern monetary theory, which is unlimited money printing. And we're on the path to negative rates if we keep this up. So the interest rate collapse is stunning. And the more rates go down, the more people are going to be forced to invest in the stock market.
Yeah, I don't understand what's going on here. You say this is one of the most compelling things, the yield at 1.24%. It's up almost 2 basis points this morning, but wow, are we at rock bottom, Louis, even as we know the Federal Reserve is going to start raising interest rates perhaps in 2022 and taking its foot off the gas in terms of bond purchases. Why is the bond market reacting the opposite of what you would expect?
Well, some of it's the European money because the euro got a little weak here. They've increased their quantitative easing. Obviously, we have positive rates, have negative. So some of it's that. Some of it is when they give us money. We stick it in the bank, and the banks buy the treasuries. I watch these treasury auctions like a hawk, and as long as the bid-to-cover ratios are okay, we're fine. It's just all the money sloshing around. A lot of it's just naturally ending up in treasuries. And of course, our Fed is manipulating the auctions with their quantitative easing. Over $80 billion a month for treasuries, $40 billion a month for mortgage-backed securities. So it'll be interesting to see what the Fed does. I only expect short-term rates to go up, 25 to 50 basis points, but it's the real story is the long-term treasury yield. And they don't want to invert the yield curve, so whatever interest rate increase they do late next year is going to be very, very small and just symbolic.
Yeah, you're also watching oil prices real close. So here's what Nancy Lazar says this morning. Is growth peaking? Yes, that's obvious. There's no way growth can continue at a double-digit pace. There's only so much pent-up demand, and the one-off unprecedented monetary fiscal stimulus is clearly fading. And yet crude oil still up at $68.24. Look, Louis, I know it's come off of the highs, But is this an indicator of a strengthening situation on crude oil, or is crude trading on something altogether different?
Well, crude naturally rebounds as the economy rebounds. You know, our domestic production's down 2 million barrels a day. And so there's a lot of factors in place. But it's very important that everybody understands that there are more people in the northern hemisphere than southern hemisphere. So what happens is come September, right after Labor Day, oil prices start to moderate because worldwide demand drops. The only way we can get rid of this cyclical pattern in oil is to move about 1 billion people to the southern hemisphere, and that's going to be very hard. So oil's going to fall in the fall, and that normally does, and then it goes up in the spring.
Louis, real quick, are you expecting a sell-off second half of the year, and would you be a buyer there? Where specifically do you want to allocate capital, Louis?
Well, you know, last time I was on with you, I mentioned I don't like August. It just gets bumpy. It's a seasonally weak month. Early September can be bumpy too. So I think the best entrance points for investors will be mid-September, just before quarter and window dressing. And then it'll be mid-October, just before the third quarter announcement season. And the best time of all is, of course, mid-November as we head into Thanksgiving. Those are your three best entrance points. So if somebody was looking to phase in the market, those are the dates I would be most excited about.
All right, Louis, great to see you this morning. Thanks very much. Louis Navellier joining us this morning on markets and investing your capital. We'll see you soon, Louis. Thank you.